Hi, my name is Britton Brown. I want to introduce myself. I'm going to start to try to utilize YouTube to share some of my pre-opening playbooks when I approach the market. Trade a lot of different markets. Specifically today is going to be about the NQ, MNQ contract for all you futures traders out there, prop firm guys, whatever. Listen, I'm doing this for a couple of reasons. One, introduce my website. I give this information out on a daily basis. Wanted to give you something constructive to utilize for how you approach the day. Show you how I approach the day. Who am I? I am a trader with over 30 years of experience. I was a pit trader. I've managed institutional desks. I've got a lot of tools in my toolbox. But specifically, I train and coach traders that are trying to go to the next level. And I've watched a lot of stuff out there that just doesn't make any sense. And I think it's what's probably causing a lot of traders to struggle with being profitable on a continual basis. And so you'll hear me talk a lot about probabilities, a lot about a playbook that has targets, and most specifically, probably the best advice I can give you, I can tell you that an institutional trader or professional trader never takes a trade without risk first. So if you hear me talk about risk units, that's your risk reward. What are we risking in order to make a trade? And so just wanted to throw that out there. I'm a big Wyckoff fan as far as an overall big picture scenario. So we'll call that a master pattern. It's a great way to look at it. So when you hear me talk about boxes, a gray box, in the middle of a trend, I'm looking for continuation with that trend. Green boxes, we have more of an expansion aspect to it. A green with a red trim, which I'll talk about today when I'm looking at a couple of these charts for you, is high volatility. I usually see those at the highs of a range on a longer term chart. So hopefully as a retail trader, you are looking at the market from the perspective of what's going on with a higher time frame. So things that I use and have used for years and years and years, a 9 and 32 EMA. When I have a 9 above the 32 EMA in all time frames, I'm in bullish mode and I'm looking to buy dips all day. So keep that in mind as I talk about it. You won't see a bunch of indicators on my charts. You will see lines. I'll talk about a red trend line, a white trend line, and a green trend line. Those are based off of imbalances. So some of you guys, ICT guys, call them fair value gaps. I use a trend line based off of that I think will be very helpful for you, at least to understand. So I'll kind of get into this. I will tell you, just to recap overnight, let's start with yesterday's close. We had heavy selling coming into the market. The CVD was getting smoked, and yet we were not seeing prices after about a 30-point reduction, which is normal. We were up at the highs, right? We kind of all anticipated that. Hopefully you were short for that. But that heavy selling coming in on the institutional side was met with other institutional buyers that were your longer term time frames. Why was that? Because we had been below, sorry, have a dog that saw somebody outside. We had been below the trend line, the overall long-term bullish trend line. We snapped back inside of that. So game on to the upside, right? We'll talk about those probabilities to continue further. We have some liquidity above last week's high that this market is trying to get to. The reason I mention all that is because when I see CVD go down like that, I see heavy selling coming in and the market stops. That tells me that institutions are sucking up some of those sell orders, and they won. And so Asia accumulated last night. London continued with that progression to the upside. And interestingly enough, at 5:30 this morning, I'm watching the markets, and guess what? We're getting up near the highs of last week's high, and all of a sudden 100 lot traders started showing up. Institutions have 24 hours a day traders on the desk waiting for specific price points. That's a big indicator. Do I think that the market is topped overnight? I think we're probably going to see a run at last week's high to get into that liquidity above there, but keep that in mind that sellers were heavy up there and absorbed any of that momentum. So that's going to put a lid on it. On the 5 minute, we do have specifically an area. I'll get into it when a stop. uh, where this market is going to go approach. We're heavily on the sell side right now, and really honestly we're probably, I'm going to switch over to my charts here right now. And again, I apologize, I'm not, this is my kind of first endeavor at this, but I'm going to flip over. This is the heat map for the MNQ, and specifically what I want to talk about is on that 5 minute, the zone. I was looking for a pullback to get under the 26,000, which is a number where overnight traders are going to be protecting their longs. They will tap into that, I have no doubt. So I'm looking for a pullback into there, that zone, and then a move back up, hopefully. Probabilities are high. How do I come up with probabilities? That's important to know. I use a quant program for that, been using that for years, and so you'll hear me talk a lot about that. Again, we are heavily stacked above. Most of the interest is on the upside right now until we get back below that. CVD is negative 295. I restart that in the morning, and so sellers are hitting more bids than the buyers lifting offers. So that's important to understand. I'm going to flip for you and show you a couple of charts. Let me pull that up for you. And again, I'll get better at this, guys, I promise. This is the 5. Let me get out of the 5 for you. And let me flip over to a daily. And then I'll work from the daily, the 4 hour to the 1 hour, and then to the 5 minute. You can see we're just above that major trend line. And so we have strong overnight bullish continuation at a higher time frame liquidity. Again, that was last week's high area. Bullish continuation. We're above the white, green, red trend lines. The 9 EMA is better than the 32, and it is spreading out. So we like that. We are currently working off an old red box, which is basically the market consolidates. We push one direction. It's more or less, if you want to go up, you need to go down. So they manipulate it lower to get retail traders trapped, and then they go ahead and go higher. So we did that a while ago. And the projection on the downside, when we don't hit that, that's an indicator that we've done the job, and we'll see that on the 4 hour. So again, downside projection fails, momentum follow through flip, the state is bullish. Again, we're looking at that liquidity zone above that 26,050 zone, and we'll have caution up there. So bullish continuation 6 to 62%, range pause is about a 26% probability, and a hard rejection is 12. Now, keep this in mind. When I see low, super low probabilities, that is a red flag for me. Why? It doesn't mean we're not going to go down. What it means is that everybody's playing for the upside. Can we continue? Absolutely. Momentum keeps coming. Institutions have big, deep pockets, and they can push for a long time. However, when I start seeing low probabilities on all the charts, that is an indicator for me that I should be highly suspect. And if I don't see CVD going in the direction of the bulls, and I see price absorption from the sellers, that things are going to change, and that's usually when you see a violent move. So again, let me get over to the 4 hour context, give you a look at that. What I'm looking at, the 4 hour, interestingly enough, we had that nice sell-off. We hit the downside projection after the manipulation higher on the 4 hour. That's that red box you see. And then we broke that trend line, and then we hit the projection to the downside. Mission accomplished. Buyers showed up. We popped a gray box. That's super important, because when we pop a gray box, either in the middle of a trend or down at the bottom in a consolidated area, usually when we rip out of that, we rip out of that with some gusto, and sure enough, we did. Enough to, be 900 points higher. And that's kind of what I look at on the longer term charts is institutions are not playing for 100 handles in the MNQ, just so you know. When they come in, they're looking for 1,000 points or more, minimum 800. So, if you're watching your longer time frames, Don't think just because the smaller time frame got it looks super bearish that they're not going to protect. They will protect and they will drive it against you. The 9 EMA is well above the 32. Trend continuation phase is the state that we're in. So, structure high or low. Expansion legs confirmed. The continuation towards liquidity is a 65% probability. Consolidation above the trend line is at 23%. And a failed breakout, again, we're at 12%. So keep that in mind. I'm going to flip over to the hour now. Take a hard look at the hour. And we can see we have a target above that is going to be, I think, kind of difficult to hit, but totally doable. We are playing off a green box with red trim. This is a high volatility zone, right? So when I see this near a, and it usually is not at the very top of a market's consolidation aspect of it or range, it's usually about 3/4 up, and that's about where we are right now. And so we're going to have big whipsaws back and forth. The target is sitting, projected upside target is sitting at 26,287.75. It is still active. If we turn and we head back down to fair value, that's the middle of that green box, then that market, I will take that off the table, at least for now. I'll watch it, it's going to remain there, but if this thing does hit the lower probability side and everybody is stuck, then I will anticipate a move all the way back down, where this week's low would be in jeopardy. But of course that's not the case. We are well above VWAP, so that's important to understand. The CVD is positive but extended. Again, probabilities is extension continuation sits at 58%. Shallow pullback, then continuation. I like that play. It's at 30%. We'll let that develop and see how the buyers show back up if we can get that that move back down to go take out those 5-minute liquidation zone. But just so you're aware, failed extension mean reversion is at 12%, and so that's I want to make sure that that is on my radar. Taking a look at the 5-minute now, we can see that the 5 minutes pushing lower. We're below the white trend line. The 9 EMA is starting to dip. That's suspect right there. Again, I mentioned earlier, we hit the upside target. That upside target on the 5-minute was sitting at 26,035. We hit that this morning, and there was heavy selling up there, absorbing a lot of the momentum, big high volume momentum guys that had trapped last night were getting stopped out, and they absorbed that. So the trend's strong. It's in a late stage. Your risk is chasing this without any kind of confirmation. So a push, a stall, a rotate sits probability wise 45%. A shallow pullback and then a continuation is at 35%, and a fast rejection and a VWAP test sits at 20%. So keep that in mind. And like I said earlier, on a 5-minute, I'm looking at where those longs are hiding their stops. That's going to be sitting right below 26,000. That would make sense, right? I don't like flat bottoms or flat tops because that's a pretty obvious place where people are going to hide. Looking right now, you've got 100 lots offered at 26,015. That'll be interesting to see if they were to take that out, and I don't think they will right now. Then I'd be watching CVD. But I think that right now the market is weak, and they're going to be looking for people to defend or at least go take out the liquidity, because that's what this market does. It is always looking for liquidity. So with that said, guys, be careful today. It is going to be a crazy market, I would imagine. I think that there's a lot of risk here being long up near the tops, and without some sort of confirmation, without volume and CVD behind that move, I think there's a trap risk above that 26,045 area, I will be looking at for any signs of weakness to be on the short side against this actual trend. Again, you know, at that point you've got institutions, they've made a crap ton of money, and they're going to be taking risk off the table, and they're going to be using those momentum players to get that risk off the table. So let me just mention, if you've not read my COT report, that's the Commitment to Trader report, comes out on Fridays, week ending on the 20th. I highly suggest I break this thing down. I go into full details of what's going on with the big institutional players, who's trapped, who's not. I think it will be a great asset for you. I give that away for free. I do that over the weekends for you to give you a good mindset coming into the first of the week. So be careful today. It's been a great run. It was a great trade last night at the close into the evening time. Nice low risk as far as being long overnight, and walked straight into the covering of shorts right at the highs there. So should be a fun day. I'm not sure if I'll be able to do this tomorrow. Again, thanks for putting up with me. It's greatly appreciated. Hopefully I will get better at YouTube and the transition here, but hopefully I've added some value to your pre-opening plan, and I hope you make a ton of money today. Thanks, guys. Appreciate you. We'll see you later.